Hey traders, welcome to, charts and coffee and some breathing. Yeah, you might have seen that funny little graphic there. That is actually a really cool little GIF or whatever. If y'all have never tried box breathing, very cool little animation for that. Anyways, for those of you wondering, what on earth was that? Welcome to Charts and Coffee Gang. Great to have you here. Happy Thursday, everyone. Good to see you. All right, so let's get to it. We've got a Thursday it's a little bit different than most Thursdays in front of non-farm payroll because we have the ADP number that has come out. So I'm going to actually bring up the intraday chart here to take a look at what we have and what I'm going to do with the intraday. Let's start off there. I'm just getting my Thinkorswim going here so I can show you some cool intraday stuff. We can do this on TradingView as well, but I know so many of you are on the Thinkorswim platform. So let me walk you through. And this is by the way, this is my typical layout, just 3 time frames and 3 different jobs. One job for each time frame, and that is it. I'm either day trading on a 5-minute, maybe a 2. Most of you know those are my 2 preferred day trading time frames. I've got my weekly because right now, gang, we've got stuff on sale. We've got stuff at wish list prices. If you thought 2 or 3 years ago, gosh, if I could only get Facebook here or Google here or Amazon at that price. And guess what? In a lot of those situations, gang, we're getting them right now. So again, I've got that weekly for the longer term view. And then here's the intraday. Here's the daily intraday chart right next to the daily. And the cool thing about that chart, as I kind of resize it there for us, is what I'm able to do is look at time and volatility. And so at the ADP release, right? Or even before we go into the open, are we hitting our heads? Is price action hitting its head against a ceiling and unable to move higher? Or is it catching support at a floor? And you can definitely see and let me get my drawing tools here. As we are sort of meandering through the morning, and this is low volatility and low volume, but still pretty interesting. We're finding support, finding support, finding resistance, finding resistance. So we're still very much range bound. And you'll notice that as we get closer and closer to the open, the volatility is going to also open up. Do you see how? And this is another adjustment that traders don't necessarily know to make consciously all the time. Look at the pre-market around the UK open to about 7 a.m. And then the more we progress through the US session into that 9:30 Wall Street bell, so the bell's going to ring here in about 26 minutes, the high-low range definitely starts to expand, and that starts to reflect the higher degree of volatility we see pre to post bell. And a lot of traders who are playing pre-market, they ask me, Rog, do you trade the evening session? Do you trade pre-market? And I'll say, yeah. And they say, what do you do? Same tools, many of which I give to many of you all for free. It's part of the layout that I share in the different rooms. And so then they'll say, well, what's the difference? Time and volatility is the difference. Who's playing and what kind of volatility do we see? So kind of interesting, ADP really wasn't much of a needle mover, was it? We'd already come off resistance. And it seems in the wake of ADP, we are moving lower. And a lot of folks say, well, Rog, what was the ADP number? Let me tell you a secret. I don't care. And here's why I don't care. It doesn't matter what I think of the actual number versus the consensus or the forecast. What matters is how do the broader market participants, how are they reacting? And then that's going to then generate my opinion about that economic event, about that hot zone. Okay. So again, tomorrow's NFP, 8:15, we had our ADP, and that's where we sit at the moment. So I hope that's just a different view. I hope that kind of opens up some ideas, some thoughts, some questions. And but as always, this show is about your questions. So let's go ahead and jump into them. Starting off, Giancarlos, how you doing, my friend? Hello, Professor. Thank you. Can we take a look? OIH. Sure. Let's crack open the. So first of all, if I'm going to look at OIH, you ask a great question. I should look at crude oil. Again, crude is still not in an uptrend. I don't want to short crude necessarily as my primary objective because a trend that preceded the chop was up. But if you're wondering, is this a zone of resistance? Thank you, Darvis. We might have pierced through it, but we've had a tremendous amount of difficulty closing above it. The clear narratives, Giancarlos, in energy are RBOB, RB futures, and natty gas. By the way, the ETF alternatives, UGA and UNG. All right. So those are heading higher. Now, OIH, while I would not dispute, is definitely something we can keep an eye on. OIH is really oil services. And if I don't have a great clear read on oil, I'm probably not going to look to see that map to clarity in OIH or even XLE for that matter. So here's your oil services. This is much more tethered to crude oil. Let me show you something here, though, my friend. XOP. This is oil and gas explorers. Look at the structure here. Look at the double greens. This is relative performance just sort of glowing at us, right? So I would say look at energy, but look in OIH because Halliburton, Occidental, let's see, here's OXY. So Halliburton is not in a trend. OXY is in a trend, but OXY also has weighting in that XOP. So keep an eye on that. Hey there, Mark. Good morning. Friendly reminder. Oh, I appreciate that, Mark. Yes. Look, gang, if you have questions, type them in. I get through them as quickly as I can at the time we have here without really skipping out on what I hope are useful tidbits. And yes, I appreciate everyone coming out here and smash that like button. I appreciate that very much. All right, UNL. Uptrend. Hey there, Robert. Uptrend. Buy the dip. Remember that as of yesterday's candle, we did lose the 21 propulsion. So now it's really up to the wave or support at the Darvis around 25.25. So we'll use the automated support resistance of the Darvis to do that. And again, I just want to remind everybody, I have some folks ask me, Raghee, if I'm not a member, where do I get some of these tools? The ones that I make available for free to non-members and have for many, many years are available at countdowntrader.com. It's a smaller group of free indicators, but some of my favorites, Wave, Grab, Propulsion, and the Darvis 2.0. And you can also find them in TradingView. You can also find them, by the way, in the TradeStation Trading App Store. For my members on Thinkorswim and members of the day trading room, free trading room, options room, futures room, and of course, my crew. Shout out to my crew over in the Sector Secrets Mastery. I've got a layout ready to go, my settings and everything in the room drive. Okay, if you don't know what the room drive is, ask some of your fellow members in the room, ask one of the moderators. They'll point out where you can find that PDF to import my layout into TOS with the free tools that I make available to members. Okay, so just want to make sure everyone can find a good number of these tools so they can see the charts the way that I'm sharing them with you all here at Charts and Coffee. Buy the dip, my friend, but it's got to be the wave. All right. Next up, Evelina asks, where do I find a daily movement range indicator? So daily is just something that's calculated. I don't have an indicator for that. It's not something that comes into play very often. The one that I share with you all, or I share here visually, not share as in give you. Although no, the futures room in the Sector Secrets Mastery get a version of this. I have an hourly price movement range indicator, right? And this is something we've been doing for years. And this is just plotting the upper and lower range of time and volatility based on historical price movement range. As far as daily, we don't plot that because it's just a high-low range number. And I don't find it to be as useful to have on the daily time frame. So there's hourly price movement ranges, and then there's daily. But again, daily really isn't that useful to know day in and day out where the upper and lower. Now, at some point, maybe we do something like that. I haven't found it to be something that I consistently need on the screen, and it's not difficult to obtain that data and mark it manually. I just think there's other probably better levels, but intraday wise, there's just nothing that can replicate the hourly price movement range. Next question is, in my investing portfolio, how much percent mental stop do I use? Um, how many percent? Well, I don't know that there's a fixed level in terms of a mental stop. There's levels on the chart that I would like to see that position be able to maintain. But I'd say just sort of generally to give you a number, although I don't want you hanging your hat on it. It's not the end all be all. But usually I'm going to be at least calibrated to about 10%. That's for the longer term portfolio, my longer term time horizon, 6 months to make the team, to make the roster, and then a holding time of really minimally 1 to 3 years, usually about 3 to 5. And we, by the way, in the Sector Secrets Mastery, every Tuesday, we have a macro market deep dive now from 3 to 4 p.m. Eastern. For an hour, we touch base on sort of the rate of change, understanding of what's going on in Fed fund futures, bonds, US dollar, and the different macroeconomic pillars. And then once a quarter, we go back in and I share what I'm looking at on my portfolio. So yes, we do definitely talk about that as an aspect of the Sector Secrets Mastery. All right, Nancy asks, in my opinion, what is the most important thing I do to set up my trading day for success? Nancy, I think that it's not a thing that I'll do every day. It's the consistency of it, right? It's the work ethic of it. It's not playing catch up and cramming one morning. It's just showing up day after day after day, and just being in touch. Always keeping the pulse of the market. So I would say it would begin with a daily chart. So if you had to say, Rob, give me the top 3 things. Know where your daily chart is in terms of the trend. Know what's on the economic calendar, and that includes not just economic data based hot zones, but also earnings hot zones, FOMC speeches, things like that from the members. And the third thing is always know your budget. I'm a fixed bet trader, meaning every one of my trades is going to have the exact same budget. Pretty classic old school way of doing it, which presumes that I do not know which one of my trades is going to be a grand slam and which one's only going to be making it to first base. Nobody does, right? This presumption of this is going to be the big trade is a fallacy, if not darn near a delusion, that some traders have yet to abandon. I've let it go. I don't know where the markets are going to go, right? Don't know. I have no clue. And it's okay, because really nobody else does either. We play a game of counterpunching, right? We play a game of reacting. And that means we see what type of pitch the market is throwing at us, and then we determine as quickly as possible whether it's our pitch or not. Because we don't have to swing, right? We don't have to swing at every move in the market. So knowing your budget as part of your daily process, your risk exposure, things like that. So just getting into the math of it. Those are the top 3 things for me, right? So thanks for the question. What about shorting the US dollar, Canadian dollar? I don't know that in terms of daily, I have a great setup for it, but it would be an overbought short, preferably in sync with resistance. So, I think it's a legit consideration. Yeah, because you've got resistance here, right? Thank you, Darvis. You've got an overbought high read on the slow stochastic. Awesome. So yeah, the only challenge is going to be how the markets are moving around the, in terms of how they're moving around that level right there, that 79.50, 7,900 level. And remember, if you're playing US dollar, this is my problem with it. This is why I do not recommend it necessarily, especially since the trend has been broken. is this is a US dollar short, which unless we start to see more hawkishness from the ECB, I'm not really a fan of. Interesting setup technically, but not something that I'm doing personally. All right, so next up, what is the difference between the Momo and the trend labels and the older labels? Donald, nothing, nothing. From time to time, I will have different ways to present the same information, but nothing. I don't change my process. Look, gang, if you are ever using an indicator and you have to keep changing the settings, the indicator is not useful. You might think it is, but it's not. Because what's happening is it's being curve fit. Either you're curve fitting it by changing the settings on some sort of interval or randomly, or the person who's creating it doesn't know what they're doing and they're also curve fitting. So settings should not change in terms of, how many periods am I looking at the slow stochastic to move? Or how many periods am I looking at my moving averages? Or what's my setting on a on a CCI? Mine have stayed the same for decades. So I say that because one, I don't want you all to be susceptible to curve fitting. Most new traders are. They will change settings on some sort of interval under the delusion that they're making it better when in fact they're curve fitting. And the other thing is we have to stay steady. Otherwise, where's the consistency and the reliability? So it's still 8, 13, 21, and 34. Always has, always will be. Thanks for the question, Donald. All right, next up is, does a pre-market activity suggest a down day today? Michael, I never presume either pre-market or even the clearing or opening range tell me where the morning is going to be. No, I think there's probably more important day trading levels that can be gleaned from a daily. That's something that I teach in my day trading classes, which is, gang, a lot of day traders neglect, in favor of a tick chart or a 2-minute chart or a 5-minute chart or a 3-minute chart. They neglect the importance of the psychology that's parked right in front of us, clear as day, on a daily time frame. I'll use that daily more so to understand what the sentiment is, or what I like to call the line in the sand. I like calling it a line in the sand because there is a line in the sand where, depending on which side of it we are, there is a pretty significant, if not abrupt, shift in sentiment. So I'll use the daily mostly. All right. What platform do I suggest for trading? I'll tell you what, my friend, it depends on the platform. It depends on what you want in terms of the ability. If you want a platform that's going to give you charting and order entry, I can only tell you what I use on a regular basis. I use TradingView fed by TradeStation. So I have the live futures data. Toss, because it's probably the most popular platform here in the simpler community, and TradingView, because I've been using TradingView for about 8+ years now, and it's a great broker agnostic platform that I have really fully supported at this point with all my indicators, except for one. And I think this year at some point we'll sort that out, which is my V profile tool. But all of my tools, free and premium, are available now on TradingView. So my main two, when I say support, I mean I create indicators for and I use myself. Toss primarily, TradingView, and then after that, TradeStation. So hope that helps. Now, if you're day trading, I know a lot of our traders. I'll give you some input from them. I'd say most of them right now are on one of two platforms for day trading. Infinity Futures for futures day trading, and I think Tradeovate's getting pretty popular. Tradeovate or Tradier? Tradeovate is getting pretty popular. Okay. Options trading through Toss is great. I really don't recommend it at the moment for a day trading approach. Okay. Are pharmaceutical companies considered under the healthcare umbrella? Some, yeah. I mean, so look up XLV Holdings, and I'll show you them right now. So XLV looks like, there we go, like this. This is your multi-chart of the top 11 holdings of XLV. All right. So you'll see they shuffle up a little bit, but yeah, there's some pharmaceutical companies there in the top 11. All right. What are my thoughts on Ford Bank? Well, I'll take the Ford. What are my thoughts on Ford? Short the rip, short the rip. Bank of America. Well, this is an open trade that I have in the options room. This is also short the rip. And so thanks for those questions, Brett. And then the last one I'll tackle before we wrap it up is TLT. What are my thoughts on TLT? Short, gang, short. And TLT, that extends to IEF. The short, macroeconomically, lower. Trend-wise, lower. So that's what I'm looking at there. Now, they might bounce around. We might see some volatility. No doubt. We seem to be at 116.5. So it's a little bit on the upper end of midway through yesterday's candle, but still dominantly red grab candles. This is not where I pick a bottom and look to get long. This is not where we start to fight the trend. The trend is still weak. Not as weak as it was, but the trend is still weak. The trend is still red. And the path of least resistance, at least based on the tools that I like to put on my chart, the path of least resistance is still definitely down. Okay? All right, gang. Thanks as always for being here for Charts and Coffee. We're here every morning, 9 to 9:20 before we head off into the rooms. Be good to each other. I'll see you tomorrow, same time, same station.